So we're going to turn on the recording. And again, today we are going to be talking about the new FinCEN rule, residential real estate, the AML reporting. AML stands for anti-money laundering. And these are and we're going to be talking about the regulations for the residential real estate transfers. And this goes into effect on March 1st. Okay, so I need to get over here to my PowerPoint very quickly so I can move these around. There we go. All right, so what is FinCEN? FinCEN is the Financial Crimes Enforcement Network, FinCEN for short, and it's actually a division of the U.S. Treasury Department. It was introduced into the real estate, it introduced a real estate rule basically to help protect financial system from misuse. Beginning March 1st, FinCEN will start to collect information from certain residential cash transactions to help you identify and prevent money laundering activity. So let's just talk a little bit about the history. In 2016, FinCEN took notice of the real estate industry as part of its efforts to combat money laundering and illicit financial activities, basically in the high-end market. So certain communities, counties, states are already kind of doing something like this, where they are collecting data and reporting information on cash transactions that are purchased with entities. At the time, there were concerns, obviously, that individuals could use anonymous shell companies purchasing high-value real estate. We had like illicit activity like drug trafficking, money laundering, all kinds of corruption, terrorism, all different ways that people were getting money and funneling it through these transactions. We hear about it all the time in the news. We hear about it constantly on social media. This stuff is happening and it's real. So we have to do something, and this is what they've put in place. So right now, as it stands, there is a rule in place, and it actually affects these following counties. So in California, some of you may already have experienced this. If you lived in San Diego, which we're in San Diego here, Los Angeles, Santa Clara, San Francisco, and San Mateo, those counties were already being reported on. You may not have known about it though, because what would happen is the title company would identify that this might be a FinCEN reportable transaction. They would actually send a questionnaire to your escrow officer, and your escrow officer would send it directly to the buyer. And so you as an agent may or may not have known about it. The escrow officer collected that data and passed it off to the title company. This is not the information form that they normally fill out. This is a separate form. And then the title company was actually doing the reporting. There were some thresholds that were involved. The threshold was $300,000 or more in most areas, with the exception of Baltimore, which had a $50,000 threshold. So that's where it was. That's where it is currently today. So for example, those of us that work in San Diego, if you have a cash buyer that was purchasing in an entity, this was going on behind the scenes and you really didn't get involved with it. You didn't really know that it was even happening. It was just kind of taking place. And like I said, the title company was the one that was sending the information and reporting. Has anybody had a FinCEN transaction that they were aware of that had to be reported? I don't know. Anybody puts anything in the chat, go ahead and put it in the chat if you have. Yeah, you may not have known about it. So let me talk to you about what the new rule is and the geographical scope. So this is what's happening starting March 1st. So if you have a transaction in escrow right now, and it's a cash transaction, and they are purchasing it in an entity, meaning a non-individual, so a trust, LLC, some other corporation, some other company, whatever, that kind of thing, and it's closing after March 1st, it is going to be falling under this new ruling, even though it's already open, okay? So the new ruling is, it applies to any state, meaning it is nationwide, not just in those few counties that we talked about. It is not limited to any specific cities or counties, so the entire United States. Anybody purchasing a property in an entity for cash in the entire United States is going to be required to be reported. And there is no longer any monetary threshold. So in other words, and we'll get into what real property is. I know you guys know it, but we're going to review that. A piece of land, $10,000 in an entity. I'm buying it in my trust. That would be a FinCEN reportable act. Okay. This only applies though to non-finance transactions, and we'll talk about what that means. Some finance transactions will be reportable, but they're specific. So there's some things you can look out for, and we'll help you with that when you're talking with your buyers about how they're intending to purchase the property. All covered transactions must be reported regardless of the value. So just know that that's just the way it's going to be, and it is what it is. We control our controllables, right?
And Dia,
We haven't,
real quick,
yes.
I just wanted to know that Shannon Bordeaux had one last week that she closed.
Oh, does she
Mm.
want to offer? So, did she have any problem collecting any of that information?
Shannon, would you like to unmute yourself and share some of your transaction information?
I can't see. She might not.
No?
No worries.
I'm
Okay.
sorry, I was eating lunch while we were talking.
That's perfect. How did it go? Did
Um,
you know about it, Shannon? Like when you were,
I did know because my client was going back and forth with me on copy with the title company, not wanting to complete the FinCEN document. And he said that um it was no longer required, but that was actually not the case. The requirement was still there for him to complete that document that title wanted him to. And but the laws were to change as of March 1st. So he was trying to get around it, but he couldn't.
he couldn't get around it, right? Exactly. Yeah, it's actually more, obviously more stringent of a rule that's coming into place March 1st. So that's
Right,
how, but
exactly.
it's good to know, like you guys were able to work through it. And there's some things that have been put in place that we'll talk about that you guys can kind of address up front. And we'll help you with that today about talking with your clients up front. And I know it's difficult because a lot of these transactions that are cash in an entity are really high-end transactions. And so a lot of times you might feel like, I don't know if I want to have this conversation just yet. I just met them, or we've been working together and we haven't identified a property yet, but I don't necessarily want to jump into their business. But it's really important that we know up front because it's going to slow things up. So, okay, thanks, Tom. So what's the purpose of the ruling? So first of all, it strengthens our AML controls, which is anti-money laundering. It prevents the misuse of shell companies in real estate. It promotes ownership transparency, enforces compliance with the Bank Secrecy Act. And then, of course, title and escrow professionals play a key role in the implementation and reporting. And we will talk more about that. We still have people in the waiting room, Tom. I don't know if you're seeing them. Okay.
Yes, I'm letting them all in. Just go
Okay,
ahead. I
thanks.
gotcha.
I'll ignore it. So, all right. So let's talk about residential real property. I know you guys deal with this on a regular basis, but I want to talk about it just to make sure that we're all clear. So real property is located in the United States containing a structure designed for occupancy of 1 to 4 units, right? Okay, so that's our normal definition. It's also land that's located in the United States. But here's the trick. Land now, you are going to have to ask the question, what is your intention for this land? Because if the intention is to build a house or to build a duplex on this property or to build a commercial unit with 4 residential units as part of it, a multi-use structure, that is going to actually trigger a FinCEN reportable act. Okay, so you do have to ask those questions. Now, I always tell people we're not the police, right? Escrow's not the police. You're not the police. You have to ask the question. If they tell you, no, I'm going to build a warehouse on it, that's not a residential property. So what else can you do, right? Like that is what it is. But you do need to ask the question. Any unit designed principally for occupancy by 1 to 4 families within a structure or land located in the United States, a condominium, a manufactured home, those all qualify if they're paying cash and purchasing in an entity. Shares in cooperative housing corporation for which the underlying property located in the United States, a co-op. right? If it's residential, 1 to 4, it's going to fall under that. And they, as I mentioned, mixed use property. So you could have a commercial down on the bottom, and maybe you have some residences up on top. You know, we're seeing that a lot. I know, like in Carlsbad, they're doing that all over the place. So that actually is also going to qualify if it's purchased in an entity. So basically, if it's all, just assume all real property transactions are going to be covered transactions if they're cash and purchased in an entity. Okay. So just be on the lookout. These are just conversations you're going to have with your buyers really early on. So who must comply with the new FinCEN rule? Okay, so starting March 1st, all settlement agents must report detailed information on the buyer, the seller, the property, and all buyer payments for any non-finance residential real estate transactions. So when we say all buyer payments, let's say
Oh.
I'm purchase. Oh, you got a question?
No.
I don't know. So I saw a question come up. So when we say all buyer payments, sometimes there might be more than one, uh, person dropping money in. Demara, you want to jump in? You've seen transactions. How many times do people put in cash, like through different places?
We get third-party deposits all the time, and those will be reportable. We'll have to have the information for where that money's coming from, and we'll have to report that during the transaction.
So do you want to talk a little bit? This is probably a good place, and we'll talk about it again. What happens in our company when we identify that something is going to be a reportable transaction?
It triggers a process internally where we send out a information request to the buyers. They're going to let us know all the information, all their contact information, their social security numbers, literally everything. I believe there's a little over 100 data points that we have to collect across the board from a transaction. So it's incredibly important that we start that in the very beginning, because there are going to be some buyers out there that do not want to provide that information, and we need to let them know ahead of time, look, this has to happen. And especially if they're going to have money coming from different entities, we're going to have the information from those entities as well. And they're going to want to let those entities know that they're getting those monies, that they're going to need all that information ahead of time as well. So it's very, very important to obtain not only who is buying this house, but who's behind it, and make sure everyone's comfortable in the very beginning so that there aren't any stops during the transaction.
Yeah. So when we talk about things, so those of you that work with investors, their corporations or partnerships, they can start gathering this information now. If they're moving forward and they've got their business plan for this year and they're going to buy 25 properties with you, the information is going to be the same if it's the same corporation making the purchase, right? So they can start gathering their information and have that ready to go right from the beginning. You as an agent will also be able to say, hey, you need to get your FinCEN information together because this is going to be reportable. So, so just something that you can prepare your clients for. So paying with cash using private, non-institutional loan. Okay, so those are also going to be reportable, and I'm going to give you a list of what those look like as well.
And a quick question, Dia.
Sure.
And I may be jumping the gun on this one, but Cinnamon is asking, does this apply for multifamily units more than 4 units?
No, that's not considered real property. 1 to 4 units is residential. Yep.
Thank you. And then also we had someone asking Shannon about her experience. Shannon, if you saw that in the chat, you can feel free to respond on it, but she's just asking why you chose to submit the information prior to the March 1st timeline.
Oh, well, she had to. It wasn't, so she had to do it. It's still required. It's a rule in San Diego. That's why.
Got it. Thank you.
Yeah, because San Diego is one of those counties that falls under the current ruling. Because we have all the luxury property. No, just kidding. So we have the best beaches in the state. So yeah. So anyways, what is a non-finance transfer? So let's talk about that. All cash purchases, obviously, seller carrybacks or private lender funding. Okay, so this is another thing. We've got some, folks nowadays that are being very creative and they're doing seller carrybacks. Those are going to be reportable. Transactions where the lender is not regulated for the following. So this is something that if you are working with a buyer and you know that they're paying cash and you know that they're buying in a trust and they're getting a loan for part of for the financing of it, you can kind of know up front if they are regulated by the Bank Secrecy Act or the BSA, or AML or suspicious activity. So things that they'll have will be like an NMLS. Like we have some hard money lenders that are actually have their NMLS. They're not just a private hard money lender and they're taking the moving their money over and that sort of thing. They're actually regulated and play by the rules. So those guys aren't going to fall under that because they have the requirement to report any suspicious activity. So that takes the responsibility off of the settlement service provider. Okay, so what's reportable? Okay, many credit unions actually are reportable. Hard money loans, private party lenders, including many LLCs set up for lending purposes. We have families that will actually, set up an LLC. We just had that here in one of our transactions where they, at the last minute, decided to set up an LLC so that so that the kid could take a loan for mom and dad. So that is reportable. That's going to be reportable. Seller carryback transactions, which we've already mentioned. What's exempt is most banks, savings and loan companies, large mortgage companies, and regulated credit unions. So here's your proof. So if you're working with somebody that is getting financing, so you're looking for that FDIC number, which is usually a bank, so like a Chase or a Bank of America, that sort of thing. They're all regulated by the FDIC or insured by the FDIC. Then you have your NMLS number, which is your mortgage banker. And then if it's a credit union, you want to make sure that it has an NCUA number. Okay, so that tells you that it is being regulated. And those things, if they're doing that, they're financed, they are not going to be reportable. If they don't have that, they are, even though they're financed. So they say all cash, but there are some finance transactions that will be reportable. So your escrow officer, like Damara, she is going to be responsible for when that contract comes in and she looks at that, she's going to tell you this is a reportable. So if she sees the cash come in or if it comes in finance, she's going to be looking for those as well. But you will know that up front because you're going to be working with your buyer and with their lender to make sure that they are regulated. Correct? You can jump in anytime. All right. So covered buyer entities include, both domestic and foreign entities. So I've had this question. People say, well, if it's a foreign entity, can they still? Yes, they can still purchase property in the United States. However, they're still going to fall under this reporting structure. So corporations, limited liabilities, partnerships, general or limited, any other legal vehicle commonly used to hold property, assume reporting if any of the persons is not a natural person. And that's what we mean by an entity. So if I buy a house for cash and I'm not putting it in a trust and I'm just buying a house, I'm not reportable. Okay. It's just me. It's if I were buying it in a trust, or if I'm buying it and then I want to move it into a trust, that's going to be a reportable transaction. Okay. So I've had people ask me, well, what if they just buy it and then I tell them don't buy it in the trust and then put it in? Please don't advise people to do that. That puts you in a whole nother area of acting out of your scope of expertise. And unless you're an attorney or a CPA that would be able to recommend that, I would not recommend somebody doing that because you don't know what could happen and what their financial situation would be. So we don't encourage that. Another thing is our escrow team and most escrow teams, we do not read trusts. So don't send us a trust and ask us who's supposed to report. It is not our job. And Damara, do you want to jump in on that a little bit?
Yeah, we just, the liability of determining what is required falls on the buyers. They are self-reporting, right? So we're not going to go back to them and say, well, what about this person? Because we're not going to take on the liability of that. It's self-reported, so we can count on what they're telling us.
Yeah, exactly. Okay, thank you. So how are trusts treated under the new rule? The transferee trust exists when assets are held by a trustee for beneficiaries or a special purpose. Even if the property is titled in the trustee's name, it is still treated as a trust or a reporting purpose. So that's just in general how that's going to work. I know people had a lot of questions. So like revocable, irrevocable, that sort of thing. That's a trust. That's all into it. So here's the commonly exempt trust though, because there is things that are exempt. So estate planning trust funded by an individual or spouses with no consideration. So what's an example of that? Let's say my husband and I, well, we do have a house. We're irresponsible right now. We do not have it in a trust and we should. And I keep saying, could you make that appointment so we could get that? So if he and I finally get with our estate planner and we say, we want to move this house that we already own into a trust, there's no consideration. We're just moving it. That's not a reportable incident. Trusts where securities reporting issuers act as trustees. So those are not going to be reportable. Certain statutory trusts, any subsidiaries of exempt trusts obviously are not going to be reportable. So there are some things that are not reportable, but there's also not any consideration being transferred. Common exempt entities. So there's a few of those. Publicly traded companies, obviously they're regulated, government agencies, banks and credit unions, insurance companies and licensed producers, registered investment companies, broker-dealers and certain regulated financial entities, subsidiaries of any of these exempt organizations are not reportable. So just keep in mind, if it's already regulated by the government, it's not going to be a reportable situation. So a lender, anybody that's regulated by the government is not reportable. Any questions in the chat? Nope. Good. Okay. So you guys should already be familiar with the FRRPA form, right? This actually dropped into your purchase packet, I think back in September. Yeah, September of last year. And that's because the ruling was supposed to actually start February, or the end of January, and they moved it out to March 1st to give everybody time to do this. So CAR was already being responsible and dropped this in. So you guys are actually, or should be, if you're dealing with a cash buyer in an entity, already sitting down and disclosing this. So there's a couple things I want to talk to you though about this. And if it were me, when you sit down and talk about agency, I'd bring this form out and talk about how you planning to purchase this house. What are you planning to do with it? Are you going to do it in a trust? Are you going to finance it? What's going on here? Because this is a great opportunity to start that conversation. But something that's really interesting, I've heard a lot of people say, oh, I just have to disclose it. That's not true, because there's a 7-day requirement for your buyer to actually provide that information when it's requested, 7 days from the date it's requested. That means when our escrow team or your escrow officer requests that information from the buyer, they have 7 days to get that back to the escrow officer. Okay, so think about it. You're doing a 10-day close, right? You've got to be preparing your clients up front to gather this information. They need to get their trusts out. They need to find out whose information they need to gather, right? Who's a beneficiary of 25% or more. All of that information they need to start gathering and not wait until the last minute, because what's going to happen, this is the scariest part about all of this, is if we do not receive that information by close of escrow, who wants to say it? Tom, Demira, Shasta,
We're not
Natasha?
closing.
We are not
We're
closing
not closing.
escrow. Nobody's closing escrow. Nobody's closing. Not just our company. Nobody's going to close your escrow.
Anybody.
But we
Yep.
should definitely say why escrow
Well-
is gonna not do that.
Well,
The
we are. We're
penalties,
going to talk
yeah.
about that. We have a slide
Yeah.
about the penalty.
Okay.
But it's not
Be
just
prepared.
Yeah, of course we're prepared. So we're not closing. So that opens up a whole nother can of worms for you guys, right? Because now you're in breach or there's other things that are going on. So your buyer does need to understand the criticalness of being able to fill out this information in advance, which is why you guys want to be able to sit down and talk to them about it. This form, which CAR has given you, has helped you to do that. Because it just follow the form, just go through it, sit down and talk to them about it. This is what's going on. And it also helps you understand where your client, how they're planning to purchase this and what they're doing. So you can dig a little deeper for that. Okay. Any questions on that? So let's talk about who's responsible for reporting. So basically, you guys are already assuming that escrow is going to be responsible. That's why we're so adamant about getting this information out to you. It's basically, there's a little bit of a cascade. So FinCEN uses a reporting cascade, meaning only one party is responsible for doing the filing of, and that means reporting the documentation, reporting the information that we've collected, and it falls at the highest ranking applicable party. So the settlement or closing agent. Well, we know that we use escrow in most transactions, or at least you should be using escrow in most transactions, which is why it is now falling upon the escrow companies. It also, though, if there's not an escrow company involved, any party preparing the settlement statement or a party recording any transfer of documents. It could be an attorney. It could be a document preparer. Let's say you've got two neighbors and they sold their property and they're doing it in a trust and they're paying cash and they decided they didn't want to use escrow. They just went to a document prep company and they're going to record it. That they're responsible for reporting it. That's the way it goes. So, what information must be reported? We're going to be looking for the reporting party, obviously the escrow or title or settlement agent, the legal entity or trust acquiring the property, any beneficial owners holding 25% or more. Yes, that means your grandkids. So if they're in the trust and you've got 4 grandkids and they all got 25% of whatever's this property, we do need their information. Trust beneficiary information when applicable. That applies to those 25%. Individuals signing on behalf of a transferee, seller information, property details, and then transaction terms, including consideration and payment sources. So I think Damara said, if we have more than one source, that we're going to be sending out that documentation to that source, to each source in the transaction. Do you want to jump in on that?
That's exactly right. Dia, you're so good. I love it.
I've done it a few times, but
Yeah.
okay. So let's talk about exempt transactions. Yoo-hoo, easements are exempt. Okay, well, so yay. Death or estate administration, a divorce, bankruptcy estates, court supervised transfers, certain no consideration trust transfers, any qualified intermediaries, 1031 exchanges, those don't fall under that because they're already all regulated. And then transaction where there's no defined reporting party. So, in other words, there's not a settlement service provider involved. Okay, so that would be who is exempt. All right. What if there are multiple entities? We've addressed this a couple times, but I just want to make it clear because we know that money comes from a lot of different sources, gifts and things like that. Each entity or trust is evaluated separately, and then more than one report may be required in a single transaction. So, yes, Kayla.
Can you give me an example of a transaction where there's no defined reporting party? Is that like between individuals where they have an attorney just do the transfer?
No, the attorney would have to report.
Okay, so
Yeah.
if they just did it in between each other and they wrote up a deed and went down and recorded it at the county, then okay. Thank you for clarifying that. Sorry.
Yeah, exactly. There's just like nobody's involved. We're doing this ourselves.
Got it.
Yeah, exactly. Okay, so let's see, where are we at here? Okay, so are commercial deals covered? They could be. Vacant land zoned as residential. Purchased by builders purchasing any lots. Any mixed use residential units, 1 to 4. Remember, we talked about that. And then again, any multifamily residential occupancy with 1 to 4. So they could be, just depends. We'll help you determine that whether it's reportable. Okay, so let's talk about Shaston had brought up. What are the penalties? save the best for last. Here's why you will not find an escrow company that's going to be closing your escrow if we don't have this information. Fines ranging from $1,400 to over $108 per violation. Okay. Each day of non-compliance counts as a separate violation. There are criminal penalties, which may be up to 250,000 in fines and up to 5 years in prison. So that could really take somebody down, right? So they are going to be very, very strict. One of the things that we can help you with is just for you guys to be thinking ahead. Before you write an offer, you may want to always talk to the seller. Who are you using for escrow? Making sure if it's going to be a reportable transaction, talk to them. Do you know what their process is for reporting? Are they going to be able to report this? Because you don't want something coming up at the 11th hour where all of a sudden they realize, oh my gosh, we have to report this, and they haven't even asked for the information. Okay, so you definitely want to get ahead of that and make sure you're having those conversations when you're writing your offers and who you're writing in for escrow. Yes,
A
Kayla.
real quick question. Are there penalties for the seller or just for the escrow, the reporting agency? Like,
The reporting agency. Yeah.
I mean, I'm not trying to get around it. I'm just curious if there are
Yeah.
penalties, like if they don't report it right, does that trickle down to the seller, you know?
No. It's
Okay.
it's
That's all.
definitely the reporting agency. They're putting a lot of pressure. You know, things change though too. So who knows? Maybe they'll change it up a little bit. Share the fun. I don't know. That would be great. But Demira, did you want to add anything to that? Or Shan?
I like my job.
Yeah.
So I'm gonna make sure that I keep doing it right because that's a lot of money for fines. They're very, very strict and they're not playing around. So I did want to mention a couple things. Please check with the seller's escrow company. Write us in on your escrow contract, on your offer. We're gonna have this down. We're gonna be doing it smoothly from day one that it's required. And you don't want it to hold up your transaction. But I also had another thing. When you accept an offer from a buyer who is sort of like a wholesaler, or you get an offer that says, you know, John Smith and or assignee, find out if they're going to be actually assigning that to somebody, because sometimes they wait until the last week of escrow. And if they're putting that into an LLC, it's now triggered FinCEN, most likely. And now potentially it could hold up your closing. So just keep in mind if you have investors as potential buyers and they're, you know, one of those flippers or wholesalers, and you kind of know that they're going to assign it to somebody, tell them, hey, that needs to be done within like the first week of escrow. So it's not holding up that closing, because again, we cannot close without that being done.
Yeah, exactly. So how can you prepare? This is some of the stuff we were talking about. Understand who must report and what qualifies. Educate your team and your clients. Identify reportable transactions early by making your escrow team aware. Collect entity and beneficial ownership info upfront. I cannot stress that enough, particularly if you sit down, you do your buyer consult, you're talking with them, and they're talking about purchasing it and in a trust or LLC or whatever it is that they're doing. This is the time before they even find the property. Get out there and get the information. I mean, they might have Uncle Joe on that trust as a beneficiary and they've lost track of his address or something. They've got to go find that information because it is reportable. And we see that all the time. You know, people are like, I can't even find my trust, or I can't, you know what I mean? And it's like they need to get that information and get it together while they're out looking for properties. And then just really partner closely with your escrow and title team. I mean, we're here to help you with that. Like I said, we're not going to read your trust, but we certainly can help guide and direct on what you need to be looking for and how you can prepare your clients. Opportunity for marketing. Real estate professionals, I think you guys can turn this into a valued added service for your clients. I mean, there's a lot of agents out there that are not being educated on this. And when they sit down with their clients, anything you can do to help prepare them for a smoother transaction makes you just that much better, right? So I would say, agents can help by pre-qualifying buyers. Is any part of this purchase going to be financed by a bank subject to AML rules? If yes, the rule may not apply. If no, it's a higher risk. If they're doing a hard money loan for a portion of it, or you know what I mean, that's going to be something that's reportable. Agents should consider advising their clients to engage legal and tax counsel. We always want to tell you guys, I'm sure your broker tells you this all the time, that's not your area of expertise unless it is. But if it's not, we don't want to be giving any legal or tax advice, right? Send them to the pros to do that. And Escrow Options Group, we're your strategic and proactive partner. Identify early agents flags when a buyer is an LLC, corporation, partnership, or entity. Coordinate at opening. Any information you can give us ahead of time when you're opening, with that opening, when you send that contract over, let us know, right? Escrow provides FinCEN compliant checklists, so you guys don't have to worry about that. We obtain the owner's names and addresses, but we might need your help. If we're not getting a response, we're going to be reaching out to you. There's a reasonable amount of effort that you can expect from your escrow team to collect that data, but at some point they're going to let you know they're not getting it, and you're going to have to jump in and help them, right? It's like anything. We don't hear about EMD money. We're going to call you like, hey, we've asked them like 3-4 times. You're going to have to reach out to your client and figure out what's going on. So it's a team effort. Tamara, do you want to add anything to that?
Yeah, there's going to be some people out there that are just not comfortable with providing all that information, There's a lot of people that are super worried about scams and all kinds of bad actors in this world. But unfortunately, we literally cannot close without it. So letting your buyers know ahead of time that, hey, this is going to be needed. If you're uncomfortable, I'm sorry, but that's what is required in order to close your escrow. So just front loading them with all this information so that maybe it's not going to be so hard to obtain that information from them once we do start asking for a lot of personal information. That would be very, very, very appreciated. But also that's going to keep things from being held up too, just front loading them as much as possible.
And the good news is our system actually will send this out through a portal. So everything is confidential, which is lovely.
Exactly.
Yeah. But if you have a client that, isn't tech savvy, which we do have from time to time, that's another thing that you need to let your escrow officer know about so that we can make arrangements to make sure that we collect that information from them and still help them feel like it's confidential and that it's not being out there. And we're happy to do that and assist with that. Happens all the time. But for the most people, it's actually, they're going to get access to a private portal that's going to have, and they're only going to have access to it. And so it's not going to go over like the internet, email, that kind of thing. It's all going to be in a secured portal for them. And then again, just keep communication clear. Escrow will update agents if the transaction is reportable, so we'll let you know. Escrow will also provide agent with updates if the buyers are non-responsive or lagging in providing required information. And then, we'll let you know if you have to adjust the timelines and set the client expectations accordingly. Okay. So any other questions about that? Hopefully we make you feel confident that we've got it covered. Summary of the new rule. Just covered transactions are residential real estate transfers, applies to any state now. Non-finance, most non-finance, no monetary threshold. So small dollar, big dollar, doesn't matter. And then it's if the transferee is a buyer, is an entity, or a trust, not a human, right? Information that's being reported is we're looking for the name of the reporting person, the name of the buyer, entity, or trust, beneficial owners of the transferee, the seller will be providing information, the source of funds, how much the transaction is for, and then property information. It's about 111 points. But basically it's a fill-in, right? So we have as a company, as a settlement, we've got about 30 days. I think it's 30 days to get that into the BSA system. If you have a corporation, you know what that BSA system is. You have a login and we go in and fill out that data. So that's where we report the information. And we have 30 days to do that so that we don't get any penalties. But that's 30 days after the close of escrow. So in order for escrow to close, we have to have this data. Anything else you want to say, team, about it? Any questions?
I think you've covered a lot. Great job, Dia. Appreciate it.
Oh, thank you.
Hi, this is Lily. Are we going to have some sort of like flyers or something like that?
To kind of talk to your clients about. We can get
Yeah.
those for you. We do have flyers, which we can send out to you, so that you can print. That just kind of touches on it. But
Yes.
really, what I would refer you back to
Mhm.
is that form that CAR has provided for you in your purchase packet, because that's probably the most comprehensive form to be able to sit down and talk about it with your clients.
Mhm.
Because you're actually disclosing it and you have to have them sign it anyways. But it really talks about the points on there. So, but use that. But we are happy to send out our kind of bullet point form that we have. It's a flyer that just kind of talks about the bullet points. And then, of course, this is also being recorded. We actually will put this up on our EOG Plus website. So it's EOG-plus, plus.com. Give it about a day. We kind of post it up to YouTube and then move it over to EOG Plus. And we'll send you the link for that as well.
Thank you.
Absolutely. Absolutely. Any other questions?
We have a question.
Okay.
Go for it.
It might sound a little ignorant because I don't have a trust personally, but if someone is named in the trust, so let's say my mom has a trust and my sister and I are named in it, do they need information from us then if my mom is buying something in cash?
Correct.
So
You got it.
anyone's named in the trust, is there an age, like if they're under 18?
If you have a 25% or more interest in the trust.
So if there's 5 people in the trust, then we don't have 25% interest.
Damara, do you know the answer to that, or Shastan?
I actually don't, but I would consider if there's percentages laid out in the trust as to the beneficiaries, you could look at that. Again, it is self-reporting, so we're not going to be verifying that, but that's a great question, Stacey.
Okay, and then if we have a buyer and we have questions, can I call you and say that my buyer fit under this?
Absolutely.
I mean, I know I do call you.
Come on, girl. I got you. We're good.
Because obviously with the buyer, we don't always have the choice of who we use for escrow, but
Yeah, absolutely. You definitely want to reach out to your escrow team if you have any questions or concerns, because they're going to be the most knowledgeable about what they're having to collect. And they are also the ones that are saying, okay, this is a cash, this isn't an entity, or it's going to be an entity. You know what I mean? It's residential. It is going to be reportable.
Thank you.
And Dia, what is the name of the CAR form?
Oh, let me go back. It's it's F. Oh, you guys are gonna ask me. No, it's
something.
FPP something. Hang on. Oh, here we go. Wait a second. It's the FRRPA form. So Federal Reporting Requirement Purchase Form. And it is part of your purchase packet. They dropped it in September. So if you're pulling up a purchase packet, that form is part of it.
This one?
Is it
Yeah. So if you go through that with your broker, I'm sure your broker will be able to help you understand it or give you ideas of how to sit down and present that to your client. But I think the biggest thing to be aware of here is that 7 days of request, right? So once escrow requests the information to be reported, they have 7 days to get that to the escrow officer. So that's what they're signing off to, right? That they're agreeing to do that. So the escrow officer is going to be saying, hey, your buyer's not being responsive. We need you to step in here and help them move along through this process and get this filled out so we can keep the transaction on schedule.
And we have a couple more sales reps on the call. Let me take a moment and just introduce Natasha. Natasha, do you want to say hi to everyone?
Sure. Hi, everyone. Dia, thank you for that. That was great. And thank you, Tom. I'm Natasha Ganis, sales executive in both South and North Orange County. And like Tom mentioned at the start, we're all here to support you. And my goal is to, be a true partner for you, someone you can rely on to make your deals smoother and less stressful. So I hope this training was helpful. And thanks everyone for joining us.
We have Liz here too. She came up to visit me in San Diego today.
Hi guys, I'm Liz Morris. I'm over in South Bay and East County, and I'm here to help you guys out with any possible way I can.
Perfect. All right. While we have everyone on here, is there any more questions or even, it's not every day you guys get an escrow officer on here that's willing to kind of open up about this kind of stuff. Anything you have going on?
Well, thank you.
No, everyone's good.
Everyone's good. Well, thank you guys so much for attending. We are happy to be a resource for you. We love providing this training. We usually do this once a month, different topics. What are we doing next month?
Social media.
So we're
With Amy
gonna,
and
social media is next month, usually about the same time. So third Wednesday of the month. So keep an eye out for our social media posts and for our MailChimps that go out to you guys with the link to register, or you can go to eog-plus.com, and that's another place where you can register for our upcoming classes and look at past classes as well. So,
And guys, when it comes to social media, a great short video on FinCEN would be a wonderful thing to start with. You'll at least create some topics with some of your clientele out there. So think about that.
for sure. For sure. Well, thank you so much. You guys have an amazing week.
Bye,
Thank
everybody.
you.
Thanks for being here.
See you on Escrow.
Bye.
Bye.
Bye-bye.
Thank you, Amy.